Perfect. Hi, guys. Hi, Dion. How are you?
Hey, I'm great. How you doing?
Doing really well. If you haven't seen Dion in action before, we have done an interview previously, and I'm so thrilled to have you back. Today, we're going to talk all about mortgages. So, if you haven't seen Dion before, let me give you some background. Dion is a mortgage specialist. There are 20,000 mortgage brokers in Canada. Dion has been ranked in the top 75 brokers in the last 3 years. He facilitates over $500 million of real estate transactions. He is a real estate treb teacher. Really?
Yeah,
I didn't know that. Good for
there
you,
you go.
Dion. Congrats. He specializes in putting clients on a $2 million plan.
hmm
Thank you for joining us, Dion. Shall we talk? Talk about what do you do?
Sure. So most people understand what a mortgage broker does, and I do all the stuff that a regular broker does, which is we listen to our clients' needs and we facilitate connecting them with the correct lender and product for their services. Most of these lenders, are major banks like the Scotiabank, TD Bank type lenders that you all are aware of, and we also have access to a whole bunch of other lenders, about 40 other lenders. But really, my regular job is to make sure that our clients get the right products. Now, that all said,
Mhm.
um, I help people buy their first home or transition from home one to home two or buy cottages. But a big part of my business is helping people identify that, they've lived in their house for 5 or 10 or 20 years, they have some good equity, and we show them what they can do with that equity. So in a past life, I was a financial planner, and we used to help
Yeah.
people, create wealth through various means. And I was lucky back then to work with a smaller boutique financial planning company that helped people not just in the regular stock market type investments, but also in direct real estate acquisition and direct business acquisition. But by far, the area that I saw most people succeed in over the last 15 years has been in real estate. And so I've chosen to try and merge my current role as a mortgage broker, but help people make these plans in order to go off and answer their big three financial questions. And I know we've talked about this before, but the three questions that all of my clients seem to have is, how will I pay off my house faster? In most cases, we can do it in 10 years rather than 20 or 30. How do I pay for my kids' education? Most people are, going down the RESP education savings plan, which might give their kids 100 grand. Whereas some of the models that we have on our real estate side is you'll be able to give your kids anywhere from 500,000 to $1 million over the same 20-year period. And the last one is how to build extra wealth for retirement. And for most of our clients, if they've got decent equity and they have, say, a 15-year time frame, then we're usually
Yeah.
able to put in place a plan that should get them to around a $2 million exit by the time of retirement. And all of this comes down to just having regular people who have regular jobs and good equity and showing them how to use that equity to go off and do these things.
Well, thank you. That's really important. And this is how a lot of people are getting by and generating a good income for their family and being able to sustain themselves and other generations of them, right? So thank you.
Yeah.
So can we talk about what's on everyone's mind? How does your business look, or how are you supporting your clients and helping the community during this time of COVID?
Sure. So in my regular business, I guess the clients who come to me are looking at expanding their holdings. What they're looking at is, looking to the next 10 or 20 years and looking at real estate as an alternative to the traditional plan that they might be put with their financial planner. And
Hmm.
so while a lot of my business is in that world, I can tell you that right now, while people still have that plan and they still have that vision for 10 or 20 years from now, that in the current environment, we're approaching it a little bit differently. And the speed at which we're executing some of this stuff may have to be augmented, maybe slow down a little bit, and we approach it a little differently. So what I'm seeing right now is clients who still have that vision of what could be, and what they're doing right now is they're refinancing their principal residences, but they're likely not going to be buying in the next week or two. They're
Yeah.
likely going to be waiting for the dust to settle, for people to get back to work, for kids to get back in school, and for the confidence in the market to return, so that people know that their incomes are stable and hopefully the world will return to normal. But until then, what they're doing is they're recognizing that, with the fact that there are fewer people working, there are probably fewer people willing to move because of the whole social distancing thing, that right now there's probably going to be a little bit of a dip in pricing because there's just less transaction happening, fewer people out there. And acknowledging that that's a possibility, that there's a possibility of price drops, then say my clients who live in an $800,000 house are saying, you know what, if our house can be appraised today at $800,000 because of the sales that happened in January and February and March this year, then what they're doing is they're getting their homes appraised now, and they're securing their lines of credit now. Now, again, these people, and these are their words to me, they're saying, if there's a chance that we can get appraised today at 800 grand, whereas in a couple of months from now it might be 750, then it makes sense to appraise our house now and get our line of credit established to the maximum now, so that when the market turns, then they're able to be amongst the first people to go back in to the market. Also, a lot of these people are saying, they'd like an extra 50 grand in the bank. You and I would sleep a little bit nicer at nighttime, knowing that if push came to shove, we had access to money. And again, so usually these lines of credit that we establish for clients to help go and buy more property, what they're also doing is looking at that going, well, you know what, we can get a 200 grand line. It's nice to know that if this thing continues for an indefinite period of time, that they have some money to fall back on and draw on. So we're helping a lot of clients right now refinance for those two reasons. Number one being security, and number two being in preparation for, what opportunities may be ahead of us.
And it's so wise because essentially we're appraising right now for a higher value, and then with your intent to buy later with a lower value. So it is a double win going on there.
Yeah, I mean, it's like, and I had this conversation with a couple of people in my industry recently. It's like, if you had a time machine, if I gave you 200 grand and I gave you a time machine, I said this time machine could take you back to the year 2008. Okay, would you like to take the 200 grand with you, or would you leave it? Right? Of course you'd like to. So there's a lot of people who've been waiting for a time when it would be the right time to enter the market. If you're one of those people who've been waiting on the sidelines, then look, the reality is we haven't seen anything like what's happening now ever, and
Right.
We haven't seen economic downturn in our country of any significance since 2008.
Yeah.
Some of my clients, a little bit older, they lived through the years 1989 and 1990, and they're saying, if it happened in 1990, it happened in 2008, 9, then this is likely another one of those times, right? And knowing what you know about history, you've been given this knowledge and this history, and you have, if you're one of the lucky ones who can qualify, then maybe this is something that you should consider. I don't want to be opportunistic, but we have to face the reality. If there is opportunity and you're lucky enough to be able to qualify, then you have a choice that maybe some other people don't have. And it's entirely up to you whether or not you want to execute on that choice, but it may be something to consider.
Absolutely. So, shall we play a little Q&A? Because I do acknowledge mortgage-wise, there are a lot of questions that could be going through a lot of people's heads.
Yeah, that's right.
Some of the questions that I've personally received and I've kind of answered, facilitated, but let's answer it on a mortgage standpoint.
Sure.
One of which, can we talk jobs and unemployment?
Mm-hmm. Well, I mean, we all know that people are losing their jobs for reasons outside of their control, right?
Mm-hmm.
So with this going on, we all know that there are fewer people who can qualify. The banks acknowledge that, I've got some clients who are personal trainers. Are gyms open at the moment? No, they're not. So they know that these people are not working. If you're unfortunately in that position, I want to let you know that there are lenders who, if you did need to access the equity in your house, there are lenders out there who will recognize the fact that you've been in that industry for a while. If you can
Hmm.
provide some historical income, they will recognize that. They're viewing the current situation as a temporary situation. And even though you may not have current income documentation, there are lenders that will recognize historical income documentation. So I want the people listening out there who maybe have lost their work and are needing to access their equity, that there are programs and products out there available for them. So yeah, that's something to take from that.
Well, thank you for being a source of information. In terms of approval and turnover times,
Yeah.
what is that looking like?
Well, if you can imagine, everybody's kind of like me at the moment, working from home in their sweats, right? And they're working at home with their kids, and an 8-hour workday is probably not a productive 8-hour workday for most people right now,
Yeah.
right? Overlay that with disjointed technology, because if everybody's working at a centralized office downtown, that's fine. But if things have to go through servers and get dispersed out to people's households, I'm talking about underwriters who work at banks and things, things are a little bit slower. So, my message to anybody buying right now and anybody selling is be understanding that the standard sort of 5 days turnaround time for an approval could potentially be a little bit longer. And yeah, that's something to consider when you're buying or selling at the moment.
Yeah. Can you tell me what would happen if your client were to lose their job?
hmm Like in the middle of an application?
Yes.
Yeah, so again, it's going to depend on the lender. Some lenders will be understanding. Other lenders will recognize the current situation. And in some cases, like with some of my clients, we've had to then change the application, meaning that
Hmm.
maybe one of my clients was working at a restaurant. The restaurant's now shut down, right? And so that income's been lost. And so what we would do is try and see if maybe their parents could step in and co-sign on a deal like that. So sometimes we don't have to make those changes. Sometimes we do. It depends on the lender. It depends on the interest rates.
Right. I know that we touched on it a little bit, but is there more to be talked about when we talk about appraising a property?
Yeah, so if you can imagine, again, due to social distancing, some
Yeah.
appraisals have been advised that they should not be entering properties. Also, if you're trying to value your property, maybe you don't want a person to be entering your property. And understanding all of this, the banks and the appraisers have come to some kind of agreements whereby instead of having a person physically enter a property, they're now allowing a drive-by. Also, the appraiser would actually walk around the outside of the property, and then in addition to that, the person residing in the property would be providing them with photographs and maybe video of the inside of the property. So we've had to adapt to the current situation, and this has been the case for the last couple of weeks, where they've made these allowances, which would be never the case in regular circumstances. Right?
Right. And is this new form of appraisal, does it have the same weight as it would have previously?
Yeah, so in the instances that we've been seeing, yes, they're still giving us the values that we want, and they're also, having the homeowner walk around and take photos of stuff they may forget, such as they'll take a photo of the electrical box, they'll take a photo of the furnace. They're not stuff that you'd put in a listing presentation or a
Yeah.
feature sheet, but they're things that an appraiser would need.
Yeah.
So with we're all learning to live in a world where we're relying on this type of video and audio technology now. And so everybody's adapted, and thankfully we haven't had any major negative issues in relation to valuations being, lower than expected as a result of that.
Good.
Yeah.
Can we chat about the lenders?
Yeah, so in the world, there's probably 30% or so of people are self-employed, and as such, 30% of my client base is self-employed as a
Yeah.
reflection of that. Self-employed people do their taxes a little differently from say a person who works at a regular salary job. And so I'll give you the example of say a plumber. He makes 150 grand a year. He has a whole bunch of expenses, so his net income might be 50 grand a year. So those plumber type self-employed people, they go to a regular bank, they'll only get a mortgage of say 250. Whereas if I go to an alternative lender, that lender won't recognize just the 50 grand, they'll recognize closer to the 150 gross income. And so that same borrower at a different bank, these alternative lenders, they might end up with a mortgage of 500 or 700,000, just depending on the way we go. So for that reason, a lot of self-employed people end up working with alternative lenders. Now, traditionally, these alternative lenders were okay to lend to a maximum of 80% of the value of the property.
Yeah.
Now, some lenders have expressed that it's definitely a hard stop at 75%, and others are saying it's on a case-by-case basis. So if you're a self-employed person, then just be prepared to, maybe face a 25% down payment requirement rather than 20 in the past.
Got it. Okay, perfect. To subsidize, like to catch up to the little gap that they may not be willing to cover anymore.
And while we're talking about self-employed people as well, I mean, if almost every business has been affected by what's going on in the world, but there are lenders who right now will recognize, your last 6 to 12 months of bank account income. And I'm sure that some of you in the weeks and months ahead, that revenue in the bank account may be a little bit lower. And so you might want to recognize that right now, while your property values are strong, also your income is also strong. And so if you're considering refinancing, now is the time for those two reasons.
Got it. Can we talk about deferrals? Like, is this the right time?
Yeah. So obviously, with people not working or getting reduced income, the ability for a person to make their regular payments on their mortgage and other things has, become challenging. So the government and the banks and the major lenders have recognized this. And so what they are doing is almost everybody is offering a mortgage payment deferral program. Now, what that means is, let's say your regular payment on your mortgage is $2,000 a month. Some banks are allowing you right now to put a pause on the need for you to make that payment. And so that $2,000 a month could be put on pause for, say, 6 months, right? So in this example I'm giving you, if it was a 6-month deferral, that's $12,000 in regular payment that you would have made but didn't make. What you do need to know is that $12,000 doesn't just disappear. It's taken and added to the actual borrowing of the mortgage, right? Keep in mind that of the 12,000, let's just keep it simple. Let's say half was interest and half was principal, right? So some banks are still asking you to pay the interest component and letting you add the principal component to the end. Other banks are just allowing you to take the full $2,000 and add it to the end, right? Now, people look at this and go, well, hang on, this creates a future problem, which is, now I'm in more debt. I'm going to be paying interest on that extra amount at the end too. My advice to you on that would be this: if you're going to do a deferral and the world comes back to normal soon, and it turns out that things weren't as bad as you expected, the 12 grand that you were holding on to, let's say it's still sitting in your bank account, and a couple of months from now. Well, what you can do with most banks is you can take that money and immediately use that as a prepayment on your mortgage. And therefore, yes, you can effectively catch up on what was missed during that period of time and minimize the extra interest that would be payable if you just fully deferred everything forever, right? So be smart about it when you get back to work. If your concern is, oh, you know what, this 12 grand, I didn't make the payment, well, knuckle down and make that payment as fast as you can.
Now, would that be based on what type of mortgage you have or the bank?
Yeah, both, right? So the reality is that I haven't had any negative feedback from clients saying that the banks are not doing it. So pretty much every bank is offering it. How they're doing it is different from bank to bank. Some banks are saying, okay, we'll give you 1 month and come and see us in a month and we'll work it out again. Other banks are saying, well, if you're calling us, you only have one option. It's 6 months or nothing. And you have to defer 6 months, right? And so it's a kind of a mix. And then we've also got principal residence mortgages versus, say, rental property mortgages. And so I've had clients call the same bank and get different answers, which is, frustrating, where one client called with multiple rental properties and every rental property was able to be deferred. I had a different client call the same lender and was told that rental properties couldn't be part of this program, right? I think that, again, this is like a day-by-day thing where the government's learning, the institutions are learning, the banks are learning, and I think by now, if we were to call, I think most banks should be accepting of deferrals on everything.
Got it.
And if
My
they're not,
last question.
maybe
Oh,
accelerate it, or if they're not, ask them to escalate it to management. Because look,
yeah.
the reality is if you've got a tenant who's out of a job, they can't pay rent. That rent is what you as a landlord depend on to pay your mortgage. And so it's like a traffic jam knock-on effect, right?
Yes.
So you should have the right to do that, in my opinion.
I would say this deferral question is probably the question that I've gotten the most
Right,
during
right.
this process. So,
Sure.
in regards to deferring it, my last question regarding that is, let's say I go about deferring my mortgage,
Yep.
and then I'm sitting on a lump sum, and I was like, oh, I really probably shouldn't have deferred it or didn't need that long of a deferment.
Yep.
I can then drop a chunk of money on it. Let's say 12,000.
Yeah, sure.
Is that dependent on what type of mortgage I have or the lender?
Okay, so this is a big question as well, because I've talked to you about prepayment, but there's also been mention of the fact that, let's just say in a regular mortgage, you might have a 20% annual prepayment, okay? So making it simple, you borrowed 100 grand, your regular payment's 2,000 a month,
Mhm.
but your annual prepayment is 20% of your original borrowing, which allows 20 grand a year prepayment, okay? So if the question is, are the banks, when all this goes back to normal, are they going to use that prepayment that, you know, in your example of the 12 grand you were able to save, and you're just catching up on what you missed on the deferral? Is that going to eat into the 20 grand?
Exactly.
Or is it going to be in addition to and separate to the 20 grand, right? The question is, we don't know yet, okay?
Okay.
Because we haven't got there and we haven't got any clear indications. But I think, this is my opinion, I think most people never exercise their prepayment anyway.
Yeah.
Who has an extra 20 or 40 grand a year that they can throw on their mortgage, right? So if at the end of this 6-month period, you have to use your prepayment option, I think for most people, it's not going to impact the prepayment that they would have otherwise made anyways. So I don't think it's a mass problem.
Okay. Thank you for that.
No
Can
problem.
we talk about rates?
Sure. Okay. So rates have been on a journey in the last, in the last 2 years, and in particular in the last sort of month or so.
Yeah.
So in the last 2 years, we have this interesting phenomena where traditionally a fixed rate mortgage might be here and a variable rate mortgage might be here, 1 or 2 percentage points lower. So let's say 4% versus 2%. Okay, that's the traditional market. In the last 1.5 to 2 years, we actually went like this. The fixed rate was in fact cheaper than the variable. And so for the last year and a half, most of my clients have been taking the fixed rate. We're now entering a world where we're coming back to the original situation where the fixed rate is higher than the variable. And so today, the variable rate is lower than it was a month ago. Today, the fixed rate is higher than it was a month ago.
Yeah.
And because of that, we're back in this situation where fixed rates are higher than variables. And you know, in terms of what rate to take today, it's definitely on a case-by-case basis. I've had clients who I put into variable rates, and I've had clients who I put into fixed rates this week. Whereas, you know, for the last year and a half, the number of people who went into variable rates I could count on one hand. And you know, years before that, the number of people I put into fixed rates I could count on one hand. But now it's definitely on a case-by-case basis. Yeah.
Perfect. So can we talk about opportunities on the other side of this?
Sure, they're sitting on their lines of credit, they're establishing them now, but they're probably waiting for a time when, you know, confidence has returned, and that's when they're likely going to go back and enter the market. So some people might say, well, why don't we just wait until then to refinance? Well, just going back to what we said earlier, you know, you could wait. Well, but there's two things around that. Number one, you're going to refinance probably at a rate at a loan amount that's lower because your home value may be a little lower. Okay.
Yeah.
Secondly, if you're just starting the refinance process when the market starts to look more positive, well, you're kind of scrambling. The market's potentially going to increase while you're in the middle of, you know, refinancing. So again, I've worked with some very savvy investors, sophisticated guys who own multiple properties, and they're getting prepared now. They say,
Yeah.
what do they say? You should fix the roof while the sun is shining. And so they're doing that now. And then when things start to turn, then they can jump back in faster. They can be amongst the first people to enter the market once the world returns to normal. Yeah.
Setting yourself up for success.
Right. Yeah. And utilizing this time, like if people are working from home, they're not commuting for 2 hours a day. They have the opportunity now to get their paperwork together and do these things in preparation, which when you're working a full 9 to 5, commuting and that type of thing, it can be quite a strain to get documentation together. So a lot of our clients are, using their downtime to be productive in this regard. Yeah.
Absolutely.
Mhm.
Is there anything else that we haven't touched upon, even if it's regarding you and what you do, that perhaps people don't know that we should probably comment on?
Yeah, so I mean, for those who might be hearing me for the first time, the reality is in a regular world, a lot of our clients are finding true wealth through real estate investment. Most 90% of clients or 90% of Canadians, if they have extra money to invest in the world, they're usually placing that in the stock market. I don't need to, give you a speech about what's happened in the stock market in the last little while. The property market hasn't dropped anywhere near as much as what we've seen in the stock market. I still see strong sales. I still see valuations being supported. I still see multiple offers in today's market for the right property. So real estate is still being transacted. And for anybody listening who would like to learn how we're showing our clients how to give their kids $500,000 versus $100,000 over the same 20-year investment period, I'd say just reach out to us now or in the future, and we'd be happy to talk you through those options.
Absolutely. Well, thank you so much, Dion, for still taking time. I know you're very busy right now.
Yeah, we have
So
to.
yeah, thank you for taking the time out of your busy day to kind of communicate this and educate us on what's going on with the current market.
Yeah.
But as always, thank you, and always like, comment, and share. Thank you.
Okay. Thank you. Bye.